The brand spanking new consumer price index. It's dropping like it's hot right now, and it is popping like it's hot. For those who don't know, the CPI is a measure of the average change over time paid by consumers for market goods. It's closely watched by the Fed as they measure inflation in the country. The expected CPI increase for November is around 7.3% year over year, which would be down from the previous month. Chris Johnson, besides the market screaming higher, what are you seeing for CPI right now? What's your initial reaction? Chris has left the building. We are talking to
No,
Chris
the
Dracula.
headline number. I didn't want
Okay,
to
we're
be
back.
seen staring at the screen there, Vaj. You got a headline of 1/10, so 0.10, and then the core coming in at 2/10. That is far below the expectations. Year over year, I'm seeing 7.1, and that's versus the 7.3 was expected, and then 6 versus 6.1. So across the board, all four numbers lighter than expected, and that's why you got the market taking off to the tune of what, 2.5% we've got here.
Oh yeah, I think it just hit the top of the volume profile. Now it's jumping around, but let's break it down. What sectors will get the most volume today as investors are reacting to food, energy?
Well, I think you're going to see the technology sector get the biggest reaction. I don't think it's going to be a reaction to the numbers so much, but look at the stocks that have been lagging for the last couple of weeks here, those that have been on hold in terms of the rally. A lot of the consumer discretionary have tried to make a way higher. Your retail have stayed higher. Your big boys, your Amazons, your Apples, your Microsofts, they've been kind of hanging out at their lows. Amazon was at a 52-week lows yesterday. I think these are the stocks that are going to get the big bid today as everybody kind of hails this as okay, we really did see the peak in inflation. The Fed tomorrow, I don't think it changes much of anything, but I think you're going to see a lot of money moving into that large tech space that people have kind of been waiting for.
Shaw, yesterday we were talking about how the market is basically going to make up its mind this week with this positive reaction to the CPI number, and CJ saying the Fed's not really going to change this narrative tomorrow. Are we going to have that Santa rally? Oh, Shaw, you're muted.
Sorry,
Okay, you're
late
back.
night. No, we're having it now. I've been calling for a December to remember, and that is the beginning of what will then be the Santa Claus ride. So I think we can see the market move higher towards and into the end of the month and maybe early January. This, to me, the takeaway here is pretty simple. It's a 6 handle on core year over year CPI. 6% inflation. That's so far from the 8.9 we're talking about, the 8, just above 8 in core not that long ago. So it's not unexpected that the market rallied. That's why I expected a December rally. I expected this number to come down. All the trends seem to be coming down in terms of inflation. Whether they stay down remains to be seen. However, we teed up for this in Hyperdrive portfolio. We bought a bunch of Q call spreads on the triple Qs. And so we're in the right place, right time.
Wow, talk about right mind, right time. That's amazing, Shaw. So you guys are definitely fist pumping in Hyperdrive portfolio. Let's tie in the economy here. Do you think this gives the Fed more reason to stay course, this CPI number?
I think there will stay the course for now. The trend appears to be down. And as everyone now looks at inflation, I heard something earlier this morning. There were some analysts talking about getting down to 2.5% annual inflation by late summer. So if we see that, and right now the trend indicates that we're going in the right direction, the Fed will stay the course, probably pause in March. And I think they may announce that sometime in March that they're going to pause, let the lag effect happen. And this has all been telegraphed. The Fed telegraphed this, Powell telegraphed this at his Q&A interview the other day, and the so-called lag, waiting for the lag. It was telegraphed that they would do that at the last Fed meeting. So the writing's on the wall, and you just have to read it and play it. It's pretty straightforward. So so far so good today. It's going to be a great day for everyone who's long anything.